Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. Today is Monday, the 21st of July in 2025. And surprise, surprise, the market's moving higher. We have not seen a material dip for about 3 months now. It's been kind of amazing. In fact, this is, in my knowledge, over the past 20 years, this is the strongest move off the bottom that I have ever seen, which has eclipsed even the pandemic reaction. It's eclipsed any bear market reaction that we've had after that. This has been the strongest move that I've ever seen. And so you kind of wonder where this is going to go. Like, are we going to have to pay for this? Or, Dave, what are you thinking out there?
I mean, you said it. It's the strongest move off the bottom to new highs ever in
Yeah.
history. I have seen some people floating the analog of charts from 2008 or leading up to 2008 out there that this thing's paralleling almost identically to right now. So if that's the case, we got a few more months before it all breaks down, I guess. But right now, I mean, think about it. What are the headwinds for the market, right? So what stands in its way from continuing to go higher? And there really isn't anything major. So the tariffs are a known commodity. Markets aren't not afraid of that anymore. The big beautiful bills passed, so taxes, we have certainty on what the tax rates are and what corporations are going to have around that, right? The economy's not falling apart. Inflation is low, right? Powell won't cut rates, but the market knows that it's only a matter of time before that happens, whether it's him or a new Fed chair that starts to do it. So, what is there to really stop this train, if you will, right now?
What about
And
employment, Dave? What about employment?
w- employment's still good.
Still
Employment
good?
numbers are still, still doing pretty well. So there isn't anything, we're not shedding jobs. We're adding jobs every month. We're beating expectations. There are some revisions, but just from a macro level, that stuff's all good. Now there's still some of the things underneath, like watching delinquencies and things like that are creeping up. Credit card delinquencies are at all-time highs, things like that are happening, but it's not enough to really break it down yet. Right? And there is a lot of money flooding the system with the big beautiful bill. We talked about like just the Trump baby accounts, $1,000 per baby. I mean, that's billions of dollars being pushed into the market, right? So there's all these like things that can keep this thing propped up. So the biggest thing right now, like we're getting into earnings season. Stocks that don't have good earnings in guidance, decent guidance at levels like we're at, are going to get punished. We saw that with Netflix last week, was down 4 or 5%, even though it beat earnings, right? So you're going to have some of that, but that's not enough to like cause this whole market to go down. Japan is lurking. If anybody's been watching the rates in Japan, really starting to move higher to really the levels they were about last August when everything broke down and we had the market freak out. But back to kind of a known commodity, the central banks around the world all stepped in and saved Japan last time, so the market probably expects that. So, like right now, we're just in kind of one of those Goldilocks periods where we're going to run, and you just look at seasonality later into August and September. Look for some sort of swoon, right? And then fourth quarter off to the races again, type thing. So that's how I'm just watching things now. Gold's breaking out today, which is really interesting to watch, though. So something to keep tabs on.
Well, let's go take a look at that.
Well,
There we go. So gold is in this big long pennant pattern. Actually, this is an ascending triangle pattern. Look at that. We have equal highs and we have a series of higher lows. So what this is, here is the change in price. That is the open end of the triangle, becomes the measured move that you append on the end of this. So for 315, this is what, 40 points. So 315 plus 40 is 355. So that's what, 3,500,
yeah,
3,550.
throw the energies on there and look at what the daily's doing and the weekly.
Okay, gold. So starting on the left-hand side here, monthly chart is a little bit diminished. It's hanging right around exhaustion. It seems like every time it slightly gets above exhaustion, it runs again and
Hmm.
takes it down. So look at the weekly energy. The weekly energy is saying, hey, I'm ready to go. Daily energy, we don't really care about the daily energy, but this is really the big signal here. So if we look at this, the last time that we had this amount of energy, look at the move that it set up. So we have essentially the same thing here. Dave, I'm going to let you talk. I got something in my throat here.
That's all right. Take a sip. You can see it on the screen, guys. You can see that breakout that we had last time. We were up at energy levels like this, and it's just what you're looking at is a giant bull flag from that move. That's, put in that kind of support level around 300, and it's getting ready to break out again. And we always talk about moves starting from the smaller time frames on out. So if you look at the daily move, starting to bleed that energy higher, right? So you're watching that, and then you're looking at that weekly. So as the daily starts to go, weekly kicks in, and that's why I said it looks like gold's starting to have that breakout again. So that's kind of what those charts are showing you right there.
Something that would be kind of fun, and we've done this before. So if we play the game right, we said that the upside target is 355.
Hmm.
And how long do we think that it would take to get up there?
Well,
Probably
look at the last time it took. How long did it take?
it went from the end of the year up until April. So it took a good four months to get there.
If you go out, I would say if you go out do 60 days and, not keep it at the top of the move, but somewhere, in the 50% to of the move that you're expecting,
So let's say
it'll
that
be cheap.
we just did October, and so what we could do is we could set up a vertical spread here, and I like
It'll be
to
really cheap.
I like to do them relatively wide. So if we set up a wide vertical spread, okay, so we're buying the 350 and then we sell maybe something like a 375, like super wide. It's only a buck 29, so
So I said it'd be
$129.
super cheap.
So $129. Look at the reward to risk. So you're risking 129, and you're potentially you could potentially make something like we could even back this down a little bit. But I mean, if you got the move up to like say 360, you're looking at a 10 to 1. So I
Hmm.
would probably back this down a little bit. Let's see. Instead of doing that, we'll go to like a 340, and we'll go 340 to 365. So that's still only $200, and then you get to move up to. I mean, look at the reward to risk on these trades. So this is our kind of like home run lottery ticket type trade, and this allows you to play for a little bit of time decay as well too, because that's the problem with the breakout moves and buying a long call is you get time decay just crushes it.
Right.
So that's
That's
that's one idea. By the
There's a
way,
good
guys,
opportunity.
uh,
There's a good opportunity on that too, but at the same time today, we were talking about, and I know I was out last week, but you probably mentioned it too, the daily charts across the board on the main indexes were charged up. And now we're seeing across the board on the SPX and the NDX, and all of that daily chart is starting to release higher. So at least in the short term, this week, you've got to run higher. Now we've got some interesting earnings this week, right? We get into the Teslas of the world and the Microsofts and all that stuff. So it'd be interesting to see if they impacted it all. But right now, this thing is taking off
yeah,
short term.
this week and next week, basically the upper bell curve of the S&P 500 earnings goes. So
Hmm.
if you look at the earnings cycle like this, like you get started a little bit, and then here's the meat in the middle. The 68% of the market cap occurs in this 2 weeks, this 2 week period. So we're going to find out real quick When would you exit GLD? Any profit target? Well, again, I love. Good question. I love measured moves. I love doing measured moves. I just did a measured move on um, Bitcoin. So Bitcoin was actually, this is one of my favorite patterns I've seen in a long time. So Bitcoin, if we go out to like a weekly chart, this was a cup with handle. I know I've talked about this before in here, but this is a cup with handle. And so the upper measured move target is the depth of this cup up to the neckline. And so when we append to that, so I had a target up here of 122, and I've been looking for this target for the last year, so I'm sure I've mentioned it here many times. So I took 1/3 of my position off here at 122. So that's to Alexis's point. This is what I love to do: is split the position into thirds, look for these chart patterns with measured move targets, and take profits on the way up. What so many people do is they round trip. So
Hmm.
it's a great example is crypto is a great example because it's like, woohoo, look at all this fun, and all of a sudden, boom, they get nailed, they sell out down there, then it runs up again, then they buy in up here, and then they round trip. And then they go into real estate or something like that a year later. So you've got to take profits on the way up. You don't know where the high is going to be. It's impossible to mark the high. There's no bell that goes off when you get near the high, and there's things happen so quickly on the way down that literally it's almost impossible to do. I remember this actual move at the beginning of 2022. I was like, okay, there's a little bit of a pullback, but I'm just going to wait until the first day of the next year. I'm going to wait till the first day of 2022 to sell my position. And that was a huge mistake. I dropped about 10% of the value of that just because I wanted to avoid a taxable event in 21. And so you just, there's no mercy to these moves. You got to take profits on the way up. Good question.
Yeah, so Doc, back to the indexes, you can see that the breakouts are starting at least on the daily chart there. So if you're looking short term, playing the XSP, if you want to do the cheaper version of the SPX or the SPY, that sort of thing, real short term, running away to the upside, like even this week, that's something to look at. Qs would be the same, NDX would be the same. So there's just and again, I don't know where it goes after that. The weekly chart still is kind of in what we would normally say is, exhausted state or close to exhausted state. But this has been kind of one of those ones where it just kind of grinds higher, right? It just kind of charges on the fly. So it's almost like what we're seeing with gold on the monthly chart, with the
Here,
monthly chart being, kind of around that line that you see even there on the weekly chart. It just kind of hangs there and goes up and down over it. It can go for a while doing that, especially with no headwinds. So we're just seeing that on the weekly chart on the S&P.
yeah, the weekly chart is in an area where it's okay if it just sort of slowly grinds higher,
Hmm.
and it can support that. Where what it doesn't support is if it just continues to blast off. Eventually, we'll have some kind of reaction. Um,
I think I saw you lit up a campaign trade today, that which is good for that type of environment.
yeah, yeah, it is. It is.
Yeah.
These low volatility trades are really good for that type of environment. And by the way, guys, I just want to get a quick plug in. I am doing a presentation. We talk about the fractals and about charts and about energies and trends and things like that. I'm doing a presentation tomorrow night at 6 o'clock as part of one of the timing research. So these guys light up an event for like 2 to 3 days. So if you look at the information on this video, if you go to the more info, that is right below the video, you'll see the opt-in link for that. So you can opt in for free, and then you get 3 days of presenters. So I'm on tomorrow night at 6 o'clock Eastern time, and I'll be talking about the 4 powerful rules that governs how markets move on any stock, any time frame. It doesn't matter. I see this intraday. I see this in monthly charts. So get your four powerful rules, the presentation for tomorrow. So
Yeah, those are always good events. Hey, to circle back to Lexus's question though, when would you exit the GLD profit target? Again, you and I had this discussion last week when we were meeting and stuff. It's like, what's a decent profit target, right? And so it depends on you. It depends on what you want to get out of the trade, right? Is 10% enough? Because if you're spending $2, that's 20 cents, or 40 cents, if you want to go 20%. So that's not it depends on you for what you want to get. So you kind of have to know that and tell yourself going into the trade. Now, something you can do, I don't know position sizing, but if I was going to do like 100 contracts on that thing, right? I would then leg out like maybe in thirds. Like once I hit 10%, maybe I get rid of 30 contracts, and I get 20%, get rid of another 30, and I just kind of go, and then I let maybe the final 20 contracts just run and see what happens because I've made enough money that it doesn't matter. So that's another way that you can look at it, but you kind of got to think about that before you get into the trade.
on the first tranche that you exit, your goal is to pay for the trade no matter what. So if you make 10%, if that allows you to round trip to the
Yep,
point where you can't lose money on the trade.
exactly.
Although you have to understand when you do something like a vertical spread, so you fix your risk on that trade, and 10% should clear that. Should
Hmm.
easily clear your cost of that trade. So that's one way to look at it. And like what Dave talked about, I like to sell into measured move targets, and it's always nice to have that last runner in case things just get crazy, that you've
Hmm.
got something that you didn't already sell out. But the odds of that making more money than the first two positions are usually really, really small. It's usually
You know,
really hard to make money on that runner unless you happen to get lucky and there's something
there's
insane
a
that happens.
this is actually a really important time, especially with where this market's at, to just quickly cover the four phases of the market because I don't know how long it'll last, but at some point, this market is going to go like, I don't even know if we're necessarily in euphoria yet, but at some point, we're going to get into serious euphoria and this market's going to go very parabolic. And people need to understand what that looks like. So, you pull up a chart, you can maybe find it on a microcosm or even a longer term, but the four phases of the market are disgust, disbelief, acceptance, euphoria, right? So disgust is tariffs earlier this year. That's disgust, right? And this is a great example, actually, now that I think about it. So disgust is that market's selling off for tariffs. Like everybody's disgusted. It's like, why the heck is this happening like this, right? And so on. And then all of a sudden, the market rallies in disbelief. There's no way this thing's going to keep going. There's just no way, right? And then it does. And then you get to, I think, the phase we've got into now, which is acceptance. Okay. All right. So it's going higher. Uh I feel better, right? Retail. I feel better. I feel that I can take a risk now, right? I feel, and I say that because markets hinge on feeling, fear and greed. And so now we're into that acceptance mode. Hey, it's okay. I can invest. I feel better about it now. Here I go, right? And that's what gives us that next big portion of the run. And then you get this like parabolic tail in euphoria where everybody chases this thing. And that's actually where some of the biggest, most of the gains are made. Then it all falls apart.
Dave,
So
one
yeah.
thing you mentioned about the tail is one kind of shape that I've always seen is what I call the S-shaped curve. So it comes
Mm.
strong off the bottom, and then we get thick in the middle.
Right.
So
And
there,
then S
there's,
up.
and
Yep.
then it finally finishes off like that. So you can kind of find this in some ways. I mean, we got thick in the middle, and then there we go. And so we're probably at some point here we will get into this sort of consolidation area, and that's probably going to be around the time that the monthly chart goes into exhaustion as well too. And so we'll
Hmm.
get some pullbacks, we'll get false rallies, we'll get all kinds of choppy stuff, but ultimately what we're playing for is we want to have enough long inventory. This is why when we do see the choppy stuff, when we see the pullbacks, we are going to load up. We're going
Hmm.
to, hear beep, beep. You're going to hear that truck backing up because,
Back of the truck.
and it's going to be tough because this area is going to be choppy and you're going to feel doubt. And that's what you're supposed to feel. You're going to feel like, oh man, I got in too early, or this is not going anywhere. And then all of a sudden, this thing will take off, and then nobody can get on board. It's like what's happening right now. Nobody can get on board. There's no pullbacks. This thing is just leaving the station. And, what we're seeing is institutions are just holding their nose and jumping on board. There's no material. So when everybody sees the same thing, when everybody gets really comfortable, this is where we'll probably get somewhere
But
between
this
a
is
5 to 10% haircut.
Yeah, this is not chasing yet. This is not what you see when everybody's chasing and like, nobody can lose. Think what was it 2023 when we hit the bottom in December and then went just non-stop through the fourth quarter.
Yeah,
And it just like every single day, it just never stopped, right?
that was
And then we
fun.
got into kind of the parabolic move at the end of that into January. Like that was a good example. So yeah, just it's a good time to kind of remember this stuff, guys, because a lot of money can be made knowing that cycle.
Okay. Are there guys? We need to roll in a minute here. Are there any questions? Anybody want to bring up anything before we? It's interesting time here between earnings and next week is going to be the Fed meeting. Does the Fed matter anymore? You almost
No.
wonder like if this is going to be obviously there. Powell's not going to do anything as far as rates, but could he sort of set the tone out there for something? Who
I
knows?
don't know if you saw, but there's a criminal referral to him to the Justice Department for the whole $2.5 billion, new Fed debacle happened today. So market didn't really react to that, at least not yet. But that was confirmed and actually done. So they are doing their best to put the pressure on him, I would say. So,
That's
but.
amazing.
I don't think the Fed has really much impact on the market at this point. I
Not
think the
like it used
market's
to. Not like it used to. I mean, it's
no, it's starting to look ahead to whoever the new Fed chair is. Maybe they do, and that's the other thing, guys. This market's doing what it's doing now, and we haven't cut rates yet. Like, just think about that. Like, that's fuel on the fire, right? Especially if it's done to just lower our debt and it's not in response to like economic turmoil or anything, right?
actually
So,
when they do cut the rates is when we will get the pullback.
yeah, typically initially there's the initial, just reaction and then it gets going again. But that would do it. If the Fed came out next week and surprise, we're cutting rates, that might do it. That might give you a little bit of a pullback for a short time. But as of now, I think the market's, squarely focused on whoever the future Fed chair is and going from there. So
Yeah. All right, guys. Well,
cool.
I want to thank you guys for. We got a pretty good bunch of live folks here today. It's good to see.
Yeah.
Plus, also those of you that are watching this on a replay later on. So, thanks as always for any questions, and we will see you guys next week.
Make
So,
make sure and check out the link in the notes below for what Doc's doing.
yeah, come
You guys
check
will
me
really
out
like
tomorrow.
that. They do a great job with that event, so check that out.
Yeah. All right, guys. Thanks everybody. We'll see you next week. Take care.